I'm going to tell you a secret that will beat 95% of every other trader on Earth. And it's not a crazy algorithm or some crypto scam. The secret is being boring. You've seen the stats, they're insane. Brokers are required to admit that 70% to 89% of people who try trading lose everything. That means for every 10 people who dive in, maybe 1 or 2 are still standing a few years later. But why? It's not because the market is rigged. It's because they're playing the wrong game. They're treating trading like a casino, a get-rich-quick lottery ticket. But the handful of people who consistently make money, they treat it like a business. And they aren't geniuses. They don't have a crystal ball. They just have a plan. A simple, repeatable, and almost painfully boring plan. Today, I am going to give you that exact plan. This isn't about hype. This is how you survive. I can literally predict why the vast majority of traders fail, and I'm going to fix it for you in this video. They don't have a plan, so they trade with their feelings, fear, greed, and pure boredom. They jump into trades without a clue where they'll get out, and they bet a huge chunk of their account on one single hope and a prayer. They snatch tiny wins for a quick dopamine hit, but let their losers run, praying for a miracle that never shows up. The result? An account that bleeds out from 1,000 small cuts and a few catastrophic wounds. This isn't a strategy problem, it's a process problem. You don't need some new shiny indicator. You need a set of rules, a boring, unemotional, and brutally effective trading plan that removes the most dangerous person from the equation. You. Your feelings, your hunches, your bad habits, gone. This plan forces you to act like a pro, manage risk like a hawk, think in probabilities, and play the long game. Forget being right 100% of the time. The goal isn't to never lose, it's to make sure your wins are mathematically bigger than your losses. I'm going to show you how to make money even if you're wrong more than you're right. That is the entire secret. This entire plan is so simple it can fit on one post-it note. It has just 3 parts: your entry rule, your exit rule for when you're wrong, and your exit rule for when you're right. Everything else is just noise. Pillar 1, the entry rule. Keep it simple. Stupid first. How do you get into a trade? Beginners think this is the holy grail. They pile on indicators, RSI, MACD, Bollinger Bands, until their chart looks like a crazy mess of spaghetti. They're hunting for that one perfect, can't-miss signal. But I'll let you in on a secret. The entry is the least important part of this entire plan. It just needs to give you a slight edge. Your entry rule can be dead simple. For example, I only buy stocks that are above their 200-day moving average and have pulled back to a support level. Or, I only short a currency pair after it breaks below a clear range and then retests that broken level. Pick one simple, observable rule. That's your trigger. Its only job is to get you into a setup where the odds are tilted in your favor. Write it down. This is the only, and I mean only, condition that allows you to risk your money. If the rule isn't met, you do nothing. Literally nothing! This one thing will save you from all those dumb trades you make out of boredom or FOMO. Pillar 2, the exit rule. When you're wrong. Your non-negotiable eject button. Okay, stop everything and listen. This is the most important part of the entire video. This is what keeps you alive. Before you even dream about profits, you have to define exactly how much you're willing to lose. This is your stop loss. Your stop loss isn't a number in your head. It's a hard order you place the second you enter a trade. It's your automatic eject button that yanks you out of a losing trade before emotion can take over. The rule is simple. You are not allowed to risk more than 1% to 2% of your trading capital on a single idea. Let's do the math. If you have a $10,000 account, your maximum loss on any trade is $100. Period. If you have a $1,000 account, your max loss is just $10. I know what you're thinking, $10? That's nothing. But this makes you invincible. A guy risking 10% on every trade just needs a handful of bad calls to get wiped out. But you, risking 1%, you can take 10, even 20 losses in a row and still be in the game, ready for your edge to play out. Your stop-loss location is determined by your setup. If you're buying at a support level, your stop goes just below it. The distance between your entry price and your stop price is what determines your position size. If your stop is 50 cents away and you can only risk $100, then you can buy 200 shares. $100 risk and 0.50 signs stop distance, shooter 200 shares. This is called position sizing, and it is the absolute heart of risk management. Pillar 3, the exit rule. When you're right, the reason you get paid. And now for the fun part, making money. If you risk $100 on a trade, what's your profit goal? Most traders get this so wrong. They risk $100 hoping to make a quick $50 because they're terrified of it turning against them. Winners don't do that. They use a strict risk-to-reward ratio. A great starting point is 1 to 2. This means for every $1 you risk, you are aiming for at least $2 in profit. This is basically a cheat code. Watch. Let's see why this is a superpower. Imagine you stick to a 1 to 2 risk reward. You risk $100 to make $200. With this simple rule, you only need to be right about 34% of the time just to break even. Think about that. You can be wrong on 2 out of every 3 trades and still make money. Let's say you take 10 trades, you lose 6 of them. 6x, $100, $600. You win 4 of them. 4 cows, $200, $800. Your net profit is $200. You were only right 40% of the time, a number that makes most beginners want to quit. And yet, you're profitable. Why? Because your winners more than paid for all your losers. This is the mathematical engine of your trading business. Okay, let's do a trade right now. Here's the challenge. Your account size, $5,000. Your maximum risk per trade, 1%, which is $50. That is our maximum loss. Pillar 1, entry. Your rule is, I will buy a stock if it's in an uptrend and pulls back to its 50-day moving average. Boom! The chart shows stock XYZ is in a beautiful uptrend and has just tagged its 50-day MA at $25 a share. The entry rule is met. We're in. Pillar 2, stop loss. The most recent swing low is at $24.50. That's the logical place to hide your stop loss. Your risk per share is the difference. $25 entry, $24.50. Stop dollars from $0.50. Now for position size. Your total allowed risk is $50, so you divide your total risk by your per share risk. $50, $0, $50, $100, shares. You buy 100 shares of XYZ at $25. The second your order is filled, you immediately place a stop-loss order to sell 100 shares at $24.50. Done. We literally cannot lose more than $50. It's locked in. Pillar 3. Take profit. Your rule is to target a 1 to 3 risk to reward. Your risk per share is $0.50. So, your target profit is 3 times that. 3x, $0.50. You $1.50 per share. You add that to your entry. $25 plus $1.50 bond, $26.50. You immediately place a take profit order to sell all 100 shares at $26.50. And now for the hardest challenge of all. We do nothing. You walk away from the computer. The plan does all the work. It either hits our stop loss at $24.50 and we lose $50, or it hits our take profit at $26.50 and we make $150. You don't touch it. You don't get scared. You don't get greedy. Let the plan work. This is boring. It has none of the thrill of gambling, but this is how you trade like a business. If you want more videos that give you a real blueprint to winning, then you have to subscribe to this channel right now. I'm not selling you a get-rich-quick dream, I'm giving you the tools to actually build a career, so smash that subscribe button and hit the notification bell because you are not going to want to miss what I do next. This plan beats 95% of other traders for one reason. It's designed to stop you from going broke today. It forces you to build the two habits that separate the profitable few from the losing crowd: obsessive risk management and unwavering discipline. Winning at trading isn't about finding a magic signal that never loses. It's about having a small statistical edge and exploiting it consistently over hundreds of trades. It's about finally understanding that you are running a probability-based business. Your only job is to follow your plan every single time. If you can do that, if you can embrace the disciplined, boring path, you give yourself the one thing that 95% of traders never have: a real shot at winning.